In this week's episode of the Stock Scores Market Minutes, I'm going to talk about the right way to trade a market correction. I'll then do my regular weekly market analysis, look at some stocks to consider for the week ahead, and the trade of the week on RIOT. All right, welcome to the Stock Scores Market Minutes. So let's get into this week's topic, which is the right way to trade a market correction. If you're a normal human being, you probably do it the wrong way, and that is you avoid selling early in the correction because you doubt that there's a real problem. And as the correction gets bigger and bigger and prices go down more and more and you get closer to that panic feeling, often you will exit the market at the worst time after it is already down significantly. Why? Because you've hit your pain threshold. At that time, you really should be thinking about buying. When everyone else is panicking, think about buying. When everyone is doubting whether the trend is actually broken, that is the time to be selling. Stock market corrections start with a break of the upward trend line. Now, panic doesn't really set in until prices have fallen parabolically. So we want to sell stocks when the upward trend line is broken, and then we want to buy them back after the correction has happened, when there is what I call a dead cat bounce candle after a parabolic fall. Now this makes a lot more sense when we look at it visually using this recent correction as an example. There was the upward trend line and there was the break of the upward trend line. That was the time to exit. Here, the market had gone down parabolically. By parabolic, I mean it had curved down and away from the downward trend line. So we were a long distance away. And then we did what I call a dead cat bounce candle. It's one where we hit a new low. In this case, this is the weekly chart of the SPY. We hit a new low, but we managed to close above the open. That's why the candle is green for that week. So we've got a parabolic downward trend, hit a new low, closed above the open. That was your cue to buy it back. You want to sell up here. You want to be a buyer down here when everyone else is panicking and take advantage of the correction to get stocks at lower prices. All right, let's get into this week's market analysis, starting us off with the US markets. Here is a chart 30-day 60-minute chart of the SPY. You can see we are in a fairly orderly upward trend. We had a little bit of a pullback middle of the week last week. We broke that on Friday as the market starts to anticipate some good news coming out of US-China trade talks. And so we are at local highs and really no sign of a breakdown. Although this trend is quite long in the tooth, it's been underway for some time. Until there's a break of the upward trend, I don't think we should be looking for the exit door. Quite simply, the market is healthy, although certainly risky given the gains of late. Looking at the longer term chart, we're going to see a reason why you want to watch for the exit door, why you want to watch for a break of the upward trend line on that last chart I showed you. And the reason is stocks are coming into the resistance from the November-December highs. And that resistance was hit twice. We hit it once, we hit it twice, we fell sharply away, now we've come back to it. And typically, when markets rally into resistance, they usually get stuck. And so although there is no sign of a breakdown on that shorter term chart, there is a good reason that we will see a breakdown soon, simply because we are rallying into that resistance. Now, it's not as strong as the longer term resistance at the all-time highs, and so we may only pause at that level for a few days, maybe even a couple of weeks. Ultimately, I think we're going to try to get back to those highs. But if something doesn't go well with US-China trade talks, this would be a great time for the market to reverse and start to move lower again. So keep an eye on that short-term chart that I showed you. Watch for the break of trend, given that we are rallying into that upward trend line. Looking at small cap US stocks, the symbol here, IWM, that's the Russell 2000 ETF. And there you have it, nice upward trend, no sign of weakness. It's green day after green day. We are coming into that resistance though, which is a point where we should get stuck. But until we show signs of actually getting stuck, I wouldn't run for the exit door. Moving along to the Canadian markets, taking a look at the TSX on the short-term time frame, 30-day, 60-minute. And you can see that that chart actually broke its upward trend on Thursday, and we got some follow-through selling on Friday, and that maybe will take us back to this longer term upward trend line, which is sitting about there. So I think we could have another couple of days of weakness. So that's something to watch for. We've got this divergence happening right now between the US and Canadian markets. Looking at the longer term chart of the TSX, really not any major breakdown here. We've had a nice upward move. We closed a little bit off of the highs for the week as we hit this resistance zone. But I think we probably just pause here for a few days and then make another run at the all-time highs from last summer. TSX Venture, micro cap and small cap stocks in Canada, lots of mining names, cannabis names, that sort of thing. Now having risen up to the downward trend line, this is judgment day. Are we able to break the downward trend, or are we going to roll over and continue lower? So that's a real critical time for this market right now. You want to keep a close eye on this. Hard to know what's going to happen. Typically we will stall at least for a few days at the downward trend line before we try to break it. But if we start moving back below the 600 mark, then I would worry that we're going to maybe retest those lows. So something to watch for next week. On to currencies, taking a look at the US dollar first. I'm talking a little bit lately about the potential for a reversal in this long-term upward trend. Why? Because the upward trend was broken. This is the weekly chart for the US dollar. And it could be that we are now forming a falling top. And I say that because last week we had some weakness after that peak was hit the week before. And so if we build a falling top and then ultimately move down through that low level there at 25.2 on the UUP ETN, then if that happens, we could be headed lower. So something to watch for. It's not going to happen overnight. Probably would take a few weeks to develop that breakdown, but keep an eye on that. And that weakness in the US dollar helping the Canadian dollar a little bit, which is looking like it wants to try and break the downward trend line. You can see the downward trend line that we've hit a number of times, and we stalled there for a few weeks and now had a little bit of a rally last week. Will we see the break of that downward trend line from a rising bottom? That would be a bullish signal for the Canadian dollar, but it hasn't happened yet. Just something to keep an eye on. Notice the stock scores are getting better. That happens because we are starting to build optimism. We're not there yet, but something to watch in the next week or two. On to the interest rates. We always take a look at the bond market, and here is the cup and handle pattern for Treasury bonds. If we can break through this resistance zone, and we're trading with low volatility under resistance, so if we can break through that resistance level, then that would be an indication that we're going to move up toward those highs, which means interest rates will move lower. We're not there yet, but something to keep an eye on. Lots of things to keep an eye on going into next week. Commodities, let's take a look at gold. Gold has been really doing well lately. I'm a little concerned about this chart because we hit some new local highs this week, but we closed below the open for the week as we get near that resistance level. So we're at the point where gold should reverse. It could go up a little bit more, hitting that 128, maybe even 129 on the ETF here. But if it breaks this upward trend line, then I would be concerned that we are starting a pullback in gold. It's overdue. Gold has had a great run the last 4 or 5 months, and it's nearing that resistance level where a reversal is likely, at least a stall is likely. So we'll have to keep an eye on this GLD chart. It's a little bit concerning to see that close below the open last week after hitting new local highs. Oil market is slowly ticking higher. You can see we've made some small gains there, but look at volume, how volume has really been dropping off. And that concerns me because volume is the fuel of the buyers. And if a market is trending up without volume, it's not showing a lot of commitment among the buyers. And so I don't feel great about the strength of the oil market until we can see some real volume coming in and moving this market higher. So feels to me like we could get a little bit of a pullback in oil unless something politically happens to motivate the oil market to move up a little faster. I'd still be cautious with oil. And finally, the fear chart, which is the VXX now B. VXXB is the symbol for the ETF that tracks the volatility index, and you can see we're moving to new lows, local lows, and very much in a downward trend. Now that's often a sign that there's complacency among traders, that people just don't worry about anything, and that can happen just before there is a move down in the stock market. So this is actually a bit of a contrary indicator when it starts to get really low. We're not super low yet. You can see back here before the market started to correct in October how low we were, but we are approaching that level anyway. So my ratings then neutral on US stocks and Canadian stocks in the long term, simply because they're still in that sideways range underneath resistance. But bullish short term, they've been in healthy upward trends in the last couple of months, and therefore we have to call it a bullish market in the short term. Gold neutral long term, bullish short term, same for oil, but again, oil not showing a lot of volume support for the strength. Markets continue to trend higher, but they're getting close to that longer-term resistance at the November-December highs. So we want to watch for whether the market breaks its upward trend or if it can actually break out through that near-term resistance. If it breaks the upward trend, that would be a clue that there's some profit taking starting, and you may want to do the same. Gold may be getting close to a short-term top given the weak close this week. US dollar showing signs of reversal with that falling top forming, but I'd like to see a sharp down move in the US dollar to confirm that signal. Oil bounce is pretty feeble with that lack of volume, and fear is very low. All right, so let's do our market scan on stock scores to find some stocks to watch. This is how I look for position and swing trades on a daily basis. We're going to run the Abnormal Breaks Canada scan, run the market scan. We find 13 stocks that we have to take a look at, and then we cycle through those charts looking for good patterns. Here's a stock that made a good pattern earlier in the week, and I think as a longer term trade it still has some potential, but really the buy signal was on Tuesday when it had that really strong volume breaking out of this little ascending triangle pattern. A little late now, but if you caught it because you were doing your market scans earlier in the week, then good for you. It does look like it's likely to head higher from here still. Let's take a look here if there's anything that I like. Hudson's Bay Company, HBC. Not bad. I wouldn't say it's a stellar chart, but it's breaking this downward trend. A little bit of a rising bottom from there. Volume stronger than normal, but I wouldn't say outstanding. Price action strong. I'd give this a 6 out of 10, which is a good rating, but not a great rating. Cycle through a few more, and I'll pause if I see the chart worth discussing in more detail. So this process will take you 5 minutes a day, and when you find something, you can then calculate your risk reward. So this stock, T.KEY, not bad. It's a ascending triangle pattern here. You can see volume coming in at the end of last week. Downward trend line has been broken. Good price action. I'd give this a 7 out of 10. It's going to run into some resistance there and then some more here. So the risk reward isn't awesome, but it's got a pretty healthy yield. I don't know if that yield is sustainable, 6.31%. You can see it right there. That's the historic number. It doesn't mean that they will keep the yield at that level, but if so, that's a pretty awesome yield on a stock that looks more likely to go higher than lower. A lot of these stocks I'm zipping past because they just don't have what I'm looking for in the chart pattern. Let's run that same scan on the US market, so I can select Abnormal Breaks US. The only difference between the two scans is one of liquidity. I favor stocks with greater liquidity on the US market because they need it. Here, CIFS, not a bad chart right off the start. Really strong volume, good price action, breaking that downward trend line from pretty low volatility. Question is, will it run into some resistance? Let's take a look at the 6-month chart. And it's a little distorted because this stock has really been pummeled, but you can see that there's going to be some resistance here at about $2, maybe 2 and change. So not awesome. I'd give it maybe a 6 out of 10. Let's see if we can find anything better. Braxis Petroleum, price action is pretty good. You can see it trying to break that downward trend line, building a rising bottom, but notice the volume isn't really there. Remember earlier I said volume is the fuel of the buyers, and you don't see great volume support, much like the chart for oil itself, and perhaps that is telling that we see that. There's Turquoise Hill, which we looked at earlier, that of course the US listing of the same company. I won't go through all of these 80 stocks that we have here. We'll sort of look through the ones below $10 perhaps, just in the interest of time. This MRNS was a decent trader on Friday. It came up in our active live scans. as a day end, a swing trade. You can see breaking out of that ascending triangle. Volume a little stronger, not super awesome. It's going to run into some resistance from that old trading range. You'll have people that remember those prices and are perhaps apt to take some money off the table if it gets up to that level. I'd give this one a 6 out of 10. We'll look at one more page here and then we will call it and go on to the trade of the week. Just take a look at this Voya Prime Rate Trust, probably a pretty conservative vehicle. I just switched it to a 3-year weekly chart. You can see really it just was oversold and now it's coming back to resistance. That's actually not what we want. It'll probably stall there and move back lower. So we'll pass on that one. You know, this is the process though, is once you learn what to look for in these charts, you can really find good opportunities with not a lot of time, because the tool does most of the work for you. You can zip through a lot of charts in a short amount of time if you know what the patterns are, and of course I'll teach you those patterns in the different course offerings that we have. It takes a little bit of practice to learn them, but once you do, you can really start to benefit. So here's a downward trend, rising bottom, big break on strong volume Friday from some optimism. My only reservation is that this break is so big that probably going to have some profit taking. So the way I would trade this TCRD is watch for it to pull back for a few days. That'll tighten it up with where it is relative to support, so that it improves the risk-reward ratio. If it can pull back into that 720, 710 range and then start to move up again. So you want to watch the intraday chart, the 15-minute chart, for example. It has the potential ultimately to get back to those highs, but I'd like to improve the risk-reward ratio by waiting for a little bit of a pullback. So that's how I would play that one. Pitney Bowes coming into resistance at the downward trend line. And let's see, anything else? This RYB, not bad. It's got some volume coming into it, little price action there, breaking from low volatility. I don't love stocks that have these huge gaps because oftentimes there's just such overwhelming pessimism, but perhaps it's going to make a little bit of a comeback. That's something to consider. I'd give that one a 6 out of 10 as well. And I think that's about all for this page. Oh, here's CBay, not bad, a little bit too much volatility. All right, let's get on to the trade of the week. And so that process that I just did on stock scores is how I found this stock, RIOT, a couple of weeks ago. If you look back to your Market Minutes video from February 10th, this was the stock that I rated a 7 out of 10 on February the 10th. And someone reminded me that those picks did pretty well with a comment in that video's comment section there. So I actually went and looked at these, and sure enough, this one is done really nicely. It was, again, a feature here on February 10th. And so if you were willing to take $1,000 of risk, the position size was 2,130 shares for a total position value of $5,048. Margin not really applicable because this stock is under $3, or it was then. And so it wouldn't have been marginable with most brokers anyway. And right now it's sitting at a 3.36 RR, and it's no sell signal yet. If you bought this stock, great, no reason to sell it yet. But that right now means a $3,360 profit, or 66% gain, a 9-day hold on a stock that really, we found with the market scan tool in just a few minutes. So you can start to see the power of this and why these tools are so wonderful. Well, that is about all I have to talk about this week. I hope that you've enjoyed this week's Market Minutes video. If you'd like to subscribe to the channel, please do that. If you like the content this week, click on that like button. And most importantly, trade well.